And in recent years, Africa has seen a fintech gold rush, particularly in payments from mobile wallets and merchant APIs to BNPL services, that's buy now, pay later. A swarm of startups have emerged across Nigeria, Kenya, Ghana, Senegal, and beyond, often backed by hundreds of millions in venture capital. While high-profile players like Flutterwave, Paystack, OPayWave, and Chipper Cash have helped digitize transactions and drive inclusion, many argue that this wave of payment-focused companies, they've reached a saturation at this point. Well, joining us to help explain this, we have Mr. Ike Eze. He's a managing partner at Beta Ventures, joining me right here in the studio. It's great to have you, sir.
Thank you.
Yeah.
Good to be here.
So I did pull out some data earlier, and I will see the number of fintechs in Nigeria and Africa. We see early 2021, that's for Nigeria, had 144. Early 2021, mid-2022, about 200 to 270 fintechs. 2023, 700 plus. Early 2024, 350 were active. And fintechs in Nigeria and Africa, we see as of January 24, had reached over 1,263 active fintech companies. That's for Africa at this point. And personally, I know I was trying to make payments somewhere, and I noticed they brought out a POS of a company I've not even seen before. I didn't even know the name, at this point. So there's a huge number, of fintechs. How are you seeing this growth?
Well, I think that if you look at sort of the sector, fintech is going to keep growing because it's required. But specifically on the payment side, and this is where I think the challenge might be, is that payments is a very crowded space. And you find that payments also is a very undifferentiated space. So company A looks like company B, but they're trying to do what company C has already scaled on. So the sector is very full of a lot of players that are trying to do the same type of thing. However, fintech overall, we remain very bullish on fintech. We think that embedded systems continue to be interesting, insurance, but moving away from payments alone is where we think companies need to start looking at.
So I guess the fintech or the financial inclusion problem is solved.
No, that's actually a bigger issue as well. So if you look at a lot of startups that are playing in our space, a lot of them are doing payments, transactions, but everything is always to the banked customer. So everyone believes that since we had agent networks and we had OPay, we had PalmPay, we had MoneyPoint, that we've solved these issues. But if you peel back the surface, you'll find that to do it, you need a bank card, which means you're banked. To do it, you need a bank account, which means you're banked. To do it, you need a smartphone, which excludes. So we still think that there's a great opportunity to the unbanked sector. We do have an investment in a company called Ajor Card that's tackling that market, but we still think that that market remains unsolved.
That's Ajor?
Ajor Card.
Ajor Card. That's
yes.
The regular Ajor where you all...
Yes.
If somebody gets money at the end of the month...
But it's taking the systems that people are accustomed to,
right,
and just laying like a digital veneer on it and making it as simple as possible so 100% of the population can participate.
Right. So do you think we have too many fintech startups?
The great thing about capitalistic markets is that the market always determines, and you will find that there are 1,000 plus, and if you fast forward 36 months and we're down to 500 or so, then the market has decided that these companies are not required. We think that there's an overabundance of payments companies, and the thing we look at is differentiation. If you are not solving a gap and you're not doing it better than the next person, then we don't think that you will be around very long.
Right, so let's imagine I'm trying to pitch. At this point, I have this fantastic business idea, and it's payments again.
Yes.
It's fintech, and I'm telling you, I'm trying to bank the unbanked. Right now, I need so amount of money. I'm trying to raise capital at this point. What are you saying to me?
I'm listening, because I think it's to listen to what the entrepreneur is actually building, because it's from that you'll determine if it's differentiated. Because you might find that somebody has a secret, and this is what we look for. Is there something that is not common knowledge. And you usually find secrets and gaps from being inside the belly of the beast. So you know that people in this market, there's a very definite gap. OPE is not targeting it. First Bank is not targeting it. All the other new entrants are not targeting it. When we size the market, there might be 10 million people that have this problem. And you're targeting that market because there's a secret you know that you're sharing with us and we're funding. So we look for differentiation in some of the things that entrepreneurs are doing. And if there is no differentiation, it makes it very hard to decide to invest.
Right. So you're not getting my money, at this point.
Well, not from me. You're getting money from someone else, but not from us. Yes.
And I did check out data from the big deal. First half of 2025,
yeah.
Big raises, so far in Africa. And I also saw a follow-up saying that Fintech is also getting most of the attention. That's in the first half of 2025. Yes. Is this going to be sustained, in your view? And what are VCs, what other sectors are VCs looking at?
So Fintech right now, I think first half of 2025, 45% of the capital that came into Africa went to Fintechs. You find that energy is coming up. So this might take the guise of clean tech. So you find that solar systems, battery technology, wind, so these are substitutes, as well as other energy systems. So the challenge for VCs versus opportunities is trying to match how long our money can go into a company. So there are some great things that need to be built, infrastructure that need to be built, but to recoup that investment might be a 15, 20-year cycle. We as investors in venture capital pools, we have a cap of about 10 years. So typically 2 to 3, maybe as high as 5 years investment, and then a 5 to 7
Would you call it patient capital? Not really patient?
It is midterm capital.
Right.
Patient capital are people that can sit for 15, 20 years.
Right.
Pension funds are patient capital.
Right.
And we think that inclusion of pension funds into the venture capital pool will also allow venture capital to be a little bit more patient because we can hand off this investment into a public market that pension companies can now come into.
Right. And are there any sectors you're seeing at this point that you think other VCs are not really looking at?
I think we all look at similar things. It's just, do you have the capability to dissect the opportunity and then add value to the company? So from a thesis standpoint, we look at broadly 4 things. One is the movement of value in goods. So that typically is logistics and fintech. Then we look at the well-being of Africans, and that's health tech, it's med tech, and then it's ed tech. So if you look at need in Nigeria, 20 million children out of school. That is a massive amount. There's no timeline that allows us to build enough schools to educate the kids. So we think AI distributed systems are going to help us get there. The third thing we look at is energy. So these are more clean energy sources. And then the fourth thing is, of course, pure tech. So platforms and real tech that we think that is very capable of being built here as well.
Right, and talking about tech at this point, what trends are you seeing? There's so much talk about stable coins at this point, and we did see the Genius Act in the US. That's also playing into the use of stable coins at this point. Do you think fintechs are looking in that direction?
Fintechs are solidly in that direction. So if you look at problems, and we go back to finding problems that need to be fixed. So if you look at, say, B2C payments in the Nigerian market, we think that has essentially been solved on the rails side. So everything else is just a slight addition on top. P2P is one of those other sectors that we think that there's movement, but how big is the market? Because I can send money to you now, you can send money to me. The friction isn't there. When you start looking at business transactions that are cross-border, imagine somebody that needs to buy parts from China, the ache that they go through to get money. Your bank tells you, I don't have the currency for you. You have to go find the currency, buy it put it in your account before you do a transaction. So that's where we're seeing stablecoins and people sort of looking at the block side of things, where you can on-ramp onto a stablecoin and use USDC, USDT, or whatever other stablecoin, and you can off-ramp in China. So cross-border, we think, is a massive market. It's a growing market as well, and we don't see those needs yet being solved. There are some exciting companies that are building that we're watching, and we think if they can figure out how to scale, excellent opportunities there.
Right, I'm talking about watching. I know you're a venture capitalist, I know you're an investor, and I know you talk to a lot of startups and founders looking for money, trying to raise capital at this point. I'm sure we have some of them watching right now. What would you say to one of those founders now that's trying to raise capital? What advice do you have for them?
I think the fundamental advice is look at the problems you're solving. Because I think if you can look at a problem being solved, you can showcase that I have built a solution, and as we say in our firm, the dogs are eating the dog food, which means that people are actually enjoying what it is that you've built. Now, the question after that is, how large is the market? I think there's some fantastic businesses that never need to raise capital from venture capitalists. They can raise local capital from angels, and it could be a fantastic business long term. So it's that scale. Can it be built into a significant company? Because that's how we get the returns that we need, is that significant companies are built.
Right, and the VCs must get their returns.
Have to.
Have to. Yeah. Thank you so much. It was great having this conversation with you, Mr. Ike. Is a managing partner at Beta Ventures and a big venture capitalist. Thank you for joining me today.
Thank you for having me.